Hello everybody and welcome to my first video, Accounting Explained. I will try to explain accounting, as you can see, on a whole different way, because I think that people understand accounting very hard because it is not explained very well. So these are the basics of accounting, and I will try to explain them as one volleyball match, as you can see. But first, let me clarify a couple of important things. So accounting has 5 major statements, but I will not explain them right now. The most important for this topic is balance sheet. Balance sheet is a statement when on one side you can see assets that company owns, and on the left side, and on the right side you can see financing sources of that assets. So balance sheet is very important statement if we want to see how stable a company is and which part of its assets is owned by, is financed by its owners. So that is the first important thing. Second important thing is that accounting is harder than shown here, but it's not that hard. I will try to explain this more detailed in my future videos, but if you like this video, then I suggest that you watch my new videos, my other videos. So what did I want to show you here? I think that accounting can be explained as a volleyball match. We will not play volleyball here, but I will try to explain something to you. What you see here is basically balance sheet. Why did why have I chosen accounting? Why have I chosen a volleyball match is because players do not cross the net. So that is very important. We have 2 sides, as you can see. We have 2 teams. And we can look at this team, this blue team, as assets, and this right team as financing sources. So this team can be called financing sources, this team can be called assets. Financing sources can be equity and liabilities. Equity is something that owner gave to company, or that company has earned over a certain period. And liabilities is something that you owe to somebody. That can be other company from which you have bought something, that can be the bank, or it can be the state, and so on. So the very important thing is, the only rule is we always have to have same number of players in both teams. We can replace players in one team, we can replace players in another team, or we can add or move players from both teams at the same time. So that is very important. So every account entry can be shown in a balance sheet, and is shown in balance sheet. So I will explain this to you with the 4 account entries, and I hope that you will find this interesting and that you will understand accounting basics. So let's think this player as, for example, the money. This is our money in the bank. This can be a building in which company does business. This can be, for example, the trucks. This can be director's car, and this can be, for example, maybe some machinery. Okay, so we have 5 assets here. This side shows you which assets is that. Okay, everything is company's assets, but who financed that assets? So we can see here that in our company, assets is financed by three parts of assets is financed by its owner, and 2 parts of assets is financed by, for example, bank or other company we owe money to. Okay, so everything now we do must be shown in these 2 teams. So let's try. Account entry 1. Company purchased its office supplies from company B and received an invoice of 600 euros. So you always have to ask yourself, what do I have? So you bought company supplies. You have company supply. That is your asset. So somebody gave you company supply. So we will take one player here and put it in our field. So this is our company supply. Okay. Who gave you that company supply? Company that produces or sells company supplies gave you that supply. Did you pay for it? No, no, you did not. Okay, so what do you have to do? You owe money for company supply to that company. If you owe money to somebody, you have to take liability. So we will take liability and put it right here. So you see that our teams have equal number of players now. We have company supply at one side. Who is company supply? Who financed for that company supply? We will say that company B financed for that supply. We owe money to them, so that is our liability. So same thing is shown here and here. Okay. So what happens next? We are now at account entry 2. That invoice is paid. So invoice for our office supply is paid. What happens? If we pay something, we have to give money. If we give money, we have less money. Okay, so we will take out this player out. This player represents our money. So we gave money to somebody. If we gave money to somebody, then we don't owe that somebody any more money. So that somebody here is our company B, and this liability is shown here. So if we gave them money, we don't owe them anymore. So we will take this player out. And we have equal number of players in this moment, in every moment. So that is the idea of accounting. Let's go to account entry 3. So company took a loan from bank. If we took a loan, what do we have? You always have to ask yourself, what do we have and who paid for it? Who financed it? Okay, so if the bank gave us a loan, we have money. So we will take money player back in our team, put it right here. So we have money. Whose money is that? Is that our money or is that bank's money? The bank gave us that money and we owe money to bank. That is important. If the owner gave the money, it would be the equity, but the bank gave the money, so it's the liability. So we will take liability player inside and put it right here. So as you can see, we again have same number of players. With every account entry, we have different number of players in both teams, but they always have the same number when compared to other team. So that is balance sheet. Okay, let's do an account entry number 4. The company paid first annuity. So as you know, the loan, when you give back a loan, you must pay a couple of annuities, and we will pay the first one. And let's say that this is a smaller amount of money, this player here, for this account entry. So we will take our money, we have to give our money, so we are giving the money, and we are removing it from our balance sheet. And what happens then? If we gave the money to bank, we don't owe bank the money anymore. So we have to take out liability. For example, let's take this player out. This is our liability, and we will put it out. So we don't have the part of our money, and we don't have a part of our liability. As you can see, we have equal number of players. So basically, guys, for my first video, that is it. If you find this interesting, continue watching my new videos. If you think that this is okay, please write below. If you think that this is not okay for explaining, please write below. And if you think that this was okay, please subscribe and watch my future videos. Thank you.